Hi everyone, welcome to the Buffett and Beyond Research Saturday ETF report. And boy, oh boy, are we rocking it this week. We gained 10% in our ETF portfolios. August 17th, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to invest even better than Warren Buffett does now. And let's look at the QQQs. And finally, down here, we got the turn up that we wanted in the intermediate term indicator. And right now, you can see the market went up, or the QQQs went up, went through the 20-day moving average and turning that 20-day moving average up. And now we're at the 50-day moving averages. And as I'm recording this on Friday, we are testing that 50-day moving average, and we'll see if it holds. The only worry we have is that there's a little gap right down here that it might go down and try to close that gap before it starts back up again. So we'll see. Today and I'm meaning Friday and Monday will be important days on this, because Monday's usually a weekday. So we'll see if this can come down, maybe come back down to test that 20-day moving average and then go up again. But the longer term, or which is the intermediate term indicator, has turned up. Good sign. And let's look at the SQQQs, which are, remember, the 3-for-1 inverse ETF of the QQQ. So we want to see that going down, and that's what we use as our hedge. And we got out of that on August 8th. So right in here, we got out of this after we had that big run up. Well, the market was going down. Don't forget, the market was going down. This goes up because it's the inverse. And we can see that it's still going down below its 50-day moving average, and right now it's pausing just a little bit in here. Again, this is Friday, but this intermediate term indicator has turned down. So we're on a trend in the downward direction right now, and we'll see if that holds going into Monday. And let's look at the technology ETF. Yep, looks like the QQQs, doesn't it? And it's right up against that 50-day moving average, trying to get through to that. So today, not so much today, because what happens during the summer on Wall Street, everybody leaves either early Friday morning or they just leave on Thursday afternoon and go to the beach for the weekend out in the Hamptons someplace. So they don't hang around on Friday, so we don't expect to see much action today, and even light volume can move the market. But Monday will be as I mentioned, usually a weekday, and we'll see where this holds at the 50-day moving average. And now for the semiconductors, which has been the weakest of the indices all year long, just got above their 20-day moving average, and down here, their intermediate term indicator also turned up. Let's look at the housing, because we have stocks in the housing, and this has not turned up yet. This has been weak because of interest rates, and even though the treasuries have been coming down, we're waiting for the Fed to raise interest rates. But it has been on an upward trend in here over the past week and a half or so, always held above that 50-day moving average in here. Now it's above that 20-day moving average, so it's sitting pretty well above the three averages. All the way down here is the 200-day moving average. But you could see how much it fell when interest rates went up, and the market did not like what it heard from the labor market at that particular time. That was, 2.5 weeks ago. And since then, it has calmed down, and interest rates have been coming down, and we'll see. But we would love to see this turn up down here, and that's what we're waiting for. Again, this is the housing ETF. And folks, you could just look up here, and you can see which ETF it is, and we're using the XHB for the housing. And here is energy. Somebody asked about energy, and they said somebody on TV said energy or bought some stocks in the energy group. And yeah, it has just turned up also. And we're sitting here with energy sitting right at again, the blue line is a 50-day moving average. The green line is the 20-day moving average, and it's sitting right there between them. So things are getting ready to pop. And don't forget, in September, which is just 2 weeks away now, we have a Fed meeting, which is 3 or 4 weeks away. And we'll see what the Fed does, if it does indeed lower an interest rate. Even some people are looking at even a 50 basis point cut. That would be nice. That would send this market nicely higher. And the utilities, a lot of you asked about the utilities. The utilities are doing very good. They're climbing. Last week we had, or about a week and a half ago, we had this big decline as interest rates went up, and then all of a sudden everything started to settle down, and these have been climbing nicely. So those of you who have the utility ETF are doing nice. But don't forget, the utilities underperform the S&P 500 by a long way, and our portfolios, as you're about to see in a few minutes, totally outperform the S&P 500 and the utilities. So we want to look at this week. We want to look at the transportation. How's the transportation doing? Because transportation is an indicator of whether goods are moving or not, or whether the raw material to make those goods are moving or not. And yeah, the market is buying those transportations, which is now sitting above all three averages, which are very, very close, aren't they, in here? So the green line's 20-day, blue line's 50-day, red line is 200-day moving average. We would like to see the 50-day and the 20-day move up above that 200-day moving average, and boy, that would be nice. And it looks like it's going to happen over the next couple of weeks, because we have a nice buy signal on the intermediate term indicator. And let's look at our sector stars. Yep, in the sector stars, 17, 18 stocks of our favorite stocks from various ETFs. So we don't have to buy stocks in all the ETFs and have portfolios of only 4 or 5 stocks. So let's go up here. And again, when we hedge, we will hedge with 10% of our portfolio. And since we hedge with the 3-to-1 inverse ETF, which we showed you a chart of before, the SQQQ, just by using 10% of our money, we are 30% hedged. And so 30% of that hedge is up 7.6% for the year. So we're making money on our hedges. And what do we do with our hedges? If we can break even on our hedges, we're happy, as long as we're hedged when the market starts to trend down. And also we use it to pay any portfolio fees if any of you are having your portfolios managed. So you're ahead on all aspects by 7.6%. So let's go down here and we can see what the stocks did this week, and we are up this week 10%. These are just the stocks alone now. Up 10% from last week, which was up 3% from the week before. So we have 3 weeks in a row here. And we can see what hedging did, because they're timed hedges, and so we can make money off it if our timing is good. And we are up 33%. Now look up here. The S&P is up 16.2%. And remember that 96% of professional money managers who manage those publicly traded mutual funds cannot outperform this number over any 10-year period. So the S&P is up 16%. This stock portfolio is up almost double. And when you take into consideration the money we're making on our hedges, we are up double the S&P 500 for the first, what are we talking about, 7-8 months of the year. So we're doing very well in the Sector Stars portfolio. And again, Sector Stars portfolio are a few stocks from the top portfolios that we follow, the top ETFs that we follow. And so we have some stocks from tech, some stocks from semiconductors, some stocks from housing, on and on. So it's very, very nice because it's scattered throughout, and this portfolio is doing very, very well. But let's go to an even better portfolio, folks, and let's look at the QQQs. So the QQQs, NASDAQ 100, and we pick about a dozen stock out of the NASDAQ 100. The only stock that we sold out of this portfolio was Tesla, and we sustained a 2% loss because we went through that fall, and then it rose up, and we waited. This was the only portfolio that we waited to sell Tesla, and when it got back to about even, we sold it. So this is a 2% 5% loss on this stock that will stay with the portfolio all year. But look at some of these other returns, 148%. Yeah, that's NVIDIA. 48%, that's a Broadcom. 35%, that's Netflix. 50% Meta. So anyway, let's get to how these stocks are doing. They are doubling the S&P 500, up 10% from last week, just like our All-Stars portfolio. And that was up 3% from the week before, pretty much like our All-Stars portfolio. Now, when you add the money we're making from hedging, which is 7.6%, this portfolio is up, if you're hedging, up 40.3%. Now, we didn't have all these portfolios in the beginning of the year, so nobody has these results. And don't forget, these stocks are equally weighted by money in each portfolio, in each position. So you have as much money in advanced micro devices as you do in Apple, as you do in Google, as you do in NVIDIA. The same amount of money in each of those, and that's hard to do in a portfolio where you're also allowed to hedge. So that's where we are, and we're up 33.8% just the stocks alone, and hedging up 40.3%. Folks, that's way more than double the S&P 500 and the QQQs themselves. So yeah, we're doing double the QQQs, because some of you say, I want to invest in tech stocks and semiconductors and I'm going to buy the NASDAQ 100. Well, okay, this portfolio is doubling that. And if you want hedging in it, we're making money on the hedges and we're up 40%. That's phenomenal for any portfolio, folks. So yeah, some people say, gee, just let's sell everything now and wait through the end of the year. We're up 40% already. If you had these stocks from the beginning of the year and if you had equal amounts of money in each position. Now, I know some of you that are just in NVIDIA and just in Broadcom and just in Netflix and just in Meta, so you're up even more than this, aren't you? Yeah, I know. You write to me and you tell me. That's how I know. I'm not reading anybody's mind here. So we're doing really, really well. So, and here's the summary to date as of Thursday, the close on Thursday. The QQQ, the top stocks in the QQQ portfolio, up 33.8%. If you're hedged, you're up 40%. Sector stars up 28.2%. If you hedged, up 33%. The growth stock, the 30 growth stock portfolio, up 20.9%. If you're hedged, you're up 28.5%. And here's the S&P. All the portfolios, whether you're hedging or not, are outperforming the S&P 500. Nice going, folks. We had a fantastic week. We made a lot of money this week. Those portfolios are up 10%, not counting the hedging, which we gained a couple of percent this week alone in the hedging. Go out, clear your head, walk on the beach, walk on the golf course, have Sunday dinner with your family and your loved ones. And folks, you have a good weekend. You stay safe, and we'll see you back here in a couple of days.